Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I go through and look at all the different sectors, look to see what looks good from a technical perspective, share all those opportunities with people in the community. I do Q&A sessions on the weekend, either Saturday morning or Sunday evening, trying to catch whomever I can that is a member. And I do midweek updates released generally Tuesday night or Wednesday morning on the companies that have good entry points. Specials coupon code if you'd like to join and get a special. It applies both to the monthly and yearly memberships, with the yearly membership having a much larger discount. Larry Thompson, XLB, which is materials. Don't sleep on materials. Looks like we've got the relative strength indicator in a bullish regime. Nice little downward break of a trend line there too. Moving on up, and really what I do when I see people trying to show a chart, this is a pretty short-term chart, I generally pull it up myself and say, okay, what does it look like on the longer-term scale? Well, looking at it here, we can move that image there. Looking at it here, this was our previous bull market for commodities. We had a nice little trend line break there, 2003, and a pretty big run-up in materials. We went from 22 all the way up to about 45. So materials doesn't seem like they have huge runs during commodity bull markets. There are companies that go up 10, 20, 30, 40, 50 times from this area to this area. So not a huge mover, but it can tell us the conditions that are coming. We also had a pretty big move from 2013, a breakout, all the way up to 2014. We had a nice little consolidation from 2018 down to 2020. So there was a consolidation there. We had a breakout in 2020 all the way up, and then we had another consolidation here, right through here. The peak was 2021, and it consolidated and finally broke out in 2024, right there. We had a breakout, we have a retest, false breakdown, and those generally result in a potential slingshot. So to me, XLB looks good. It's sitting on top of its pattern. It very well could run higher. If this were to break down, it would have done it here on that big wick in 2025 of April. Liberation Day. It was liberating materials in the wrong direction, trying to. But that was a false breakdown, and I think we're going to see a higher move in materials. It looks good. Yeah, I agree with the chart there. So whenever I see charts, whenever I see people share opinions on this stuff, I go and chart it myself. I go and I look at it and say, is this bullish or not? And I come to my own conclusion. I don't use other people's opinions necessarily. I might see something that someone else sees, chart it and say, yeah, that looks really good. And guess what? No finder's fee. That's great. So Twitter is good at exposing potential sectors that could be good. It doesn't mean that they are good, and it doesn't mean that I'm going to incorporate it into the portfolio. I do not play every single chart that looks good. I play the stuff that has really good asymmetry. Asymmetry is large upside potential, small downside risk. So for example, on XLB, when I go back and look at history, I'll just give you one example real quick. The bottom to top from 03 to 08 was 157% in XLB. So someone would say, well, this is a great investment. It's breaking out. We should be in it. It's like, well, I don't know. Now, we could go look at emerging markets. And emerging markets, this is just EEM, roughly the same time frame in 2003 all the way up. Well, that was 419%, and we're not even grabbing the bottom of this. This is probably more like a 6, 7, 8x if you were to take the bottom in '01. And there are other sectors in emerging markets that did a 20x during this time frame from '01 all the way to 2007-8. 20. So when I look at something, why would I invest in materials that only went up a small amount versus some of these other ones that have a lot more leverage? And somebody could say, well, it depends what exposure you want. And I agree with that. It depends the exposure you want. But I think there's more leveraged areas than this XLB materials ETF in particular. Patrick says, this statement might shock some people. There is practically no limit to how much debt the US government can take on. They always have an out, purchasing power destruction. And that's why we're worried. We're worried because they have this out. Historically, what kept government in check was the gold. It was a gold-backed currency system. It was gold that was slowing the spending, that was keeping the humans in politics in line. Right now, there's nothing keeping anyone in line. They're just stealing crap through the currency. That's it. It's that simple. And yes, purchasing power destruction is the result of everyone pillaging the purchasing power through the currency. So we have this constitution, and in that, gold and silver are supposed to be money. And they do everything in their power to get away from that. You know what? Look at this shiny object. Maybe we call it crypto. Shiny object. The sell-off in natural gas is best described with this chart. So we've been using more nat gas over the summer. Maybe not using. We are building inventories of natural gas storage more so over the summers. Our demand hasn't been as high as previous ones, and that could be chalked up to basically cooling, air conditioning, and electricity demand. So we're projecting up towards the top. That also can be seen in the charts. So if I go to natural gas, we're seeing a bearish setup in the short term. So whenever you get a move higher, you can see it kind of turned over and you get this upward facing pattern, which is an inverted flag pattern. Those tend to break down to the downside. That's also why you haven't seen me jumping all over natural gas, even though there are people of a differing opinion. There's, Eric Nuttall is really bullish on natural gas. And people might ask me, hey, Andy, how come you're not bullish on natural gas? It's in this chart. This chart's telling me that we might have a little bit of a pullback. So what am I going to do? I'm just going to wait a little bit. Wait a little bit, let this kind of deflate out a little bit. Maybe we get down to the mid-twos and then BTU this fall. Really good entry point. So I'm not stating that we will 100% get there, but to me, that's what it looks like. It looks like we're going to come back down into the lower to mid-twos. Maybe even on a retest here, maybe 240, 230 something. Could go dip a little bit below it too. It's possible. We've got some support where we're at. So again, we'll see what happens. I don't know the future, but this could get a little bit weaker in nat gas in the short term. Smart real estate bets, because cash needs to go somewhere. And bonds are still not appealing enough to provide real competition. Totally agree with that statement. And it's not that I agree. Rates have broken out of its 40-year downtrend. The whole market is telling you that. Money supply growth caused by cheap money doesn't cause inflation unless or until that money flows down to the working class and then rising wages drives prices up. When it doesn't, it stays with the investor class. They have to park it somewhere, and the U.S. stock market is the most popular vehicle. Stocks don't crash until there's a recession, and job growth is the most critical metric. The 2001 recession only lasted 8 months, but the NASDAQ never bottomed until job growth recovered in 2003. Fear drives markets down. There is none right now. There's no fear. So that's his opinion there. They're printing a bunch of money. It's not working its way into the hands of people. It's staying in the investor class, and it's making its way into investments, into the US stock market. It's being funneled in there. This is what American energy dominance looks like. Crisis level lows in leading production indicators. I thought this was funny when I first read it. I was like, yeah, this isn't what energy dominance looks like. This is ridiculous. This is your rig count and frac count continuing to decline. That is not what energy dominance looks like. That's what a slowdown looks like in production and supply. It's coming. Prices are too low. Nick says, this must be that weak oil demand that the bears keep talking about. So global crude oil consumption hit 104 million barrels per day at an all-time high. There we are, and this is the weak demand. Demand keeps going up. So, and rig count keeps going down. What do you think is going to happen in the future here? If this keeps going down, and this keeps going up, well, we're going to have prices go up at some point. And that's what we're waiting for. If you're an oil investor, you're just waiting. You're waiting for that to occur. Praise says, okay, so let me get this straight. None of the ISR restarts have gone to plan. Everyone's disappointed. But DNN shareholders and utilities believe a greenfield ISR project in Canada, which has never been done before, will sail smoothly and deliver 41.9 million pounds in 5 years at 8.4 million pounds per annum. Okay, thumb up. I agree. Anything that is new has a lot of risk. Has a lot of risk. Now, I've stated this before. People have asked about Denison Mines in the Q&A sessions and stuff, and I just say, hey, look, whenever there's new technology being introduced, there's risk. I'm not saying that's bad or good. I'm just saying that there's risk. That's all. So if none of the ISR restarts, which doesn't even have new technology risk or new greenfield, have gone to plan, and everyone's disappointed, what makes you think a greenfield ISR project's not going to have any risks or pains as they grow? Just saying. Peter Lynch says there are substantial rewards for adopting a regular routine of investing and following it no matter what, and additional rewards for buying more shares when most investors are scared into selling. Guys, that's the whole thing. That's the meat and potatoes right there if you want to know. If you want to become a good investor, and you're not a good investor right now, what are some things that somebody can focus on? I would say focus on the human psychology, the short-term market movements of human psychology. And then you have to figure out a way to act and behave differently than everyone else. You have to remove yourself from the herd. So when everyone is scared, including yourself, that is when you buy. And I know everything in your body and your instincts are telling you, I want to get out. But that's what you need to do is you need to train yourself to get in when everybody is scared into selling. The sentiment. Everyone is basically a parrot. They're just a bunch of parrots saying the same crap that dude said over there. So one person may even post on Twitter here, and then everybody just parrots whatever that person posted. It becomes an extension of their, that person's idea becomes, how can I say this? The person's idea is stored in your brain for a period of time, rent-free. And then people just parrot whatever that is. Blah, 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 blah. They just spew it back out. Well, this person said X, so then therefore I believe. If you want to be good, you can't do that. You need to find an edge. Figure out what that edge is. Maybe it's looking at charts, taking an opposite opposite of what sentiment is. I mean, that's really where you're going to get the most mileage for your buck. It's all in sentiment and doing opposite of everyone else. The crude reality is a material percentage of what you own today are losers. You just don't know it yet. Being a great stock picker is about picking winners and also picking out the losers in your portfolio as soon as possible. What defines or what characteristics do loser stocks have? And conversely, what stocks are great and why are they great? The biggest gains that you can do of anything in investing, in my opinion, is to get really good at finding great companies and then buying them at very low prices. That's the best strategy that I think anyone can do consistently. It's not an inconsistent strategy. The strategy will consistently get you into sectors and companies that continue to outperform. It still doesn't mean that you'll be 100% correct. So in order to do very well in this game, you need to know what your limits are. You need to know what's good and what's bad. And you need to know what is a realistic outcome versus just, oh, that's pie in the sky. So if you're working with probabilities and not, probabilities are going to have some sort of outcome. So the strategy, in my opinion, would be to buy as cheap as you can, knowing that you can't get the bottom, buying the best companies that you can find, knowing that not all companies will be the best, and knowing that no one will be perfect in doing it. And that some of your entry points will do incredibly well, and some of your entry points may go down 40, 50% on you. And what are you going to do with all of those potential outcomes? Do you stay in a stock when it's 200 or 300% up? Do you continue to ride it, or do you sell? Do you continue to ride a company that you purchased and it went down 30, 40%? Do you add more? How do you know it's good? How do you know it's undervalued? Those are the things that you need to learn. That's what makes poor investors versus great investors. A great investor may buy a whole bunch more because they know the company. They know it's undervalued. They have confidence in it. They've seen this before. They know the limitations of the strategies. They know the limitations of the game. Ryan Froldy says, you make more in bull markets than you lose in bear markets. Look at the big greens versus the small reds. Be optimistic. Be a bull. Why? Because you get paid. You get paid being a bull. You don't get paid being a bear. Bears sound smart, but they don't make any money. I don't care about sounding smart. I want to make money. Investment wisdom, Warren Buffett, don't pass up something that's attractive today because you think you will find something better tomorrow. There's a lot of people that I think do this. They won't buy something that is really attractive. And they'll say, well, it's probably going to go down, next week. I'm going to try to buy it cheaper. Well, if you're always trying to buy something cheaper, eventually it will turn and go up. And then you say, well, I don't want to buy that now. I could have bought that at $1.50, but now it's $2 a share. Why would I buy it at $2 a share when I could have bought it at $1.50? At some point, you got to pull the trigger. You got to pull the trigger. You can't be scared. And even if it goes up or down, you got to have a strategy and a plan. Hey, if this goes down, I'm going to buy more. So I won't buy my full position in one shot. Okay, there's a strategy going. Good work. Grady says, gold often leads lumber, and gold broke out hugely 18 months ago. Called the breakout in real time. This chart now shows lumber has a very bullish setup. The pushed narrative is inflation is done. No, it's not by a mile, unfortunately. The second inflationary wave is coming. If renovating or building, buy what you need now. There's lumber in the monthly candlesticks, and there's the MACD coming across zero. That's generally when you start to go full bullish mode. And there's lumber right there. Inverse, it's an inverted shoulder head shoulder, potentially. It's got the question mark. Coming down with Freight Futures AM update. We got dry bulk is up, Capesize up 2%, Panamax up 1%, tankers are flat for VLCC and Suezmax. Here's Grady with silver. He says one of the most significant breakouts in history is in the making. It followed Blue Arrow perfectly from linked post below. The monetary reset is moving into the next phase. For heaven's sake, do not miss this move. This is it. You know, I think that was in, what was that, margin call, I think? When the guy was saying we need to sell it all, this is it. Yeah, this is silver with the biggest cup and handle pattern breaking out. The mother of all very probable cup and handles, the bigger the base, the higher in space. This is it, guys. We're breaking out. For heaven's sake, do not miss this move. Do not miss this move. You only get one shot. That's it. One shot. And that's all I've got for today. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And that's all I've got. So we'll catch you next time. This is Finding Value.